Welcome to Day-to-Day Financial Management through weekly financial tracking. Let's get right to it. So we're going to learn how to track financial transactions. That's going to create awareness, and we're going to learn how to plan upcoming transactions to create intention. Here's how this works. You start with a starting point. If you've never done this before, then your starting point should be your checking account balance from the very end of the prior month's end. So if this is February, it should be your checking account balance from January 31st. Step 2, log each transaction that's happened since the beginning of the month. We're also going to categorize those transactions. Step 3, note your anticipating transactions for the rest of the month. So everything you think is going to happen until the end of the month. Step 4, spend only when there's a source. So when you're thinking about what's going to happen for the rest of the month, once you're moving about, you want to make sure that you only spend money when the thing you want to spend on was something that you anticipated going for the rest of the month. We'll talk more about that later. And then there's an optional number, step 5, called Go Public. Main reason we do this is to create awareness and discipline around our spending. Ideally, every time you engage in a financial transaction, you're employing awareness and discipline and intention in a world that moves very quickly. We have Apple Pay, where you can just sort of walk into Whole Foods, make a purchase, ding, you tap your phone and you keep moving and you don't even realize, hey, I just made a decision to spend some money. And we all always want to be somewhat aware of that decision so that we can be intentional about what we're spending on. So how do we do this? Let's come back to step 1. So you have a starting point. We're going to use the old-fashioned checkbook method. The first category is going to be your company. So, you know, who did we purchase from, right? 2, when did it happen? 3, did money go out? If so, how much? 4, did money come in? If so, how much? And then the impact is going to be, if money went out, it'll just be minus an amount. If money came in, it'll be plus an amount. And then how did we spend it? Was it Zelle, credit card, check, etc.? And then what's left over after the transaction? And again, what category do we want to put this spending in? So let's come up with an example. January 31st, our month-end checking account balance was $246.38. So let's look at what this would look like. And you can do this by pen and pencil on a piece of paper. You can do it by Google Sheets. You can do it by Excel. Same difference. On the date January 31st, my checking account balance was $246.38. Then I'm going to log each transaction which has happened since the beginning of the month. So let's look at what that looks like if we add it to what we just showed you. Okay, so here's what we were. We had the January 31st, $246. And then I had some income. I got a little bit of income from my business. So my balance went up to $671. And then I had some outgo. I had swimming lessons. I paid my swim school instructor $185. I did that through Zelle. And that reduced my balance to $486. And notice how I'm categorizing everything I'm spending. Balance, income, fitness, those are just categories. Now, here's a quick note on credit cards. I tend to make a lot of my purchases through credit cards, but we want to make sure we itemize those transactions. So first, I'll show you the wrong way. The wrong way is, here's my balance, here's that income we talked about, here's that outgo to the swim school, and then here's a lump sum credit card payment of $373, which leaves me with a balance of $112.95. This is not the right way to do it. Instead, I want to itemize everything that was included in that credit card payment. So same start, $246, have my $425 of income and that same $185 Zelle to my swim instructor. I still spent $373 and I paid it to the credit card company, but why? Because I spent $313 at Macy's and $60 at Good Food Restaurant, and my balance was $112.95. We want to itemize our credit card transactions because we want to know what we're paying for. When we buy things from Macy's, was it clothing? Was it worth it? When we bought food from Good Food Restaurant, was it worth it? Was the food good? We want to be thinking about that, and doing it this way creates awareness, which is very, very powerful. So here's what it would look like if I did it for like a whole month. Started out with my $246. I had that same income that I mentioned before, that same swim school expense. And then here are a bunch of transactions for a $373.43 credit card purchase. And I made this credit card payment on February 23rd, but it was made up of all these transactions. And notice that I logged every transaction and I even categorized them. Happens to be all these were eating out. That's kind of interesting. But it still leaves me with that same balance, $112.95. This is how you do your tracking. So by categorizing the transactions, Macy's is probably clothing, Good Food Restaurant is probably eating out. It helps us do analysis later on. I might say, hey, where's all my money going? And if I go back to the last slide, I can say, oh, most of it's going to eating out. Good to know. That's why it's helpful to do that categorization. Okay, so let's talk about the next step because it makes these practices even more useful. We want to note our anticipated transactions for the rest of the month. So if you recall, let me go back a couple slides. We ended up with a balance of $112.95 after that credit card transaction. So we start with $112.95 and we say, what's going to happen for the rest of the month? Well, I know I'm going to get a paycheck. I know I've got this trip coming to New York City. We're going to go and see a concert, go to see the Wu-Tang Clan. And then we got some bills coming up. And actually, let me note that I'm going to be eating out with my friends after the Wu-Tang concert. I'm sure that's going to happen. And then also, let me set aside another $100 for eating out because clearly I spent a lot of money doing that. And after all of that income and expenses, I expect to have at the end of the month $37.95. I call that number my URCAP, my unreserved checking account balance. So remember, this all starts with a checking account balance. Then I say, this is what I've done. And then I say, this is what I'm going to do. And then I say, this would be my checking account balance after everything that I've set aside for. That's why I call it my unreserved checking account balance, my URCAP. So now not only are you tracking what you spent, you're creating more awareness as you move forward. And remember, step 4 is spend only when there's a source. So remember, I had set aside $100 for more eating out for the rest of the month. This says, okay, if we're going to be eating out, it better cost under $100. If somebody invites me to a steak restaurant and I think it's going to cost $200, I don't have a source for that. I'm not doing that this month, maybe next month. But if somebody invites me to get a slice of pizza, well, I know I got $100 set aside for eating out. I'm happy to do it, no problem. So that's a way to turbocharge this behavior. When you decide in advance what you're going to spend, and then you say, I know what I got, I know what I have available to me, and that's what I'm going to spend from. That really creates intention and it creates discipline. It's very powerful. The optional step 5 that I mentioned earlier is to go public about problem areas. So I've devoted a lot of attention to eating out in this presentation. So let's say I got an eating out problem. How does that work? So let's say I say to my brother and a couple of friends, guys, I want you to help me with some accountability. This week, my plan is to spend only $25 on eating out. And then at the end of the week, I'm going to say, guys, remember I planned to spend 25, I actually spent 35, and my goal for next week is to spend 30. That's what I mean by going public. It's let people know what your intention is, let them know what you actually did. Hopefully you don't do this with people that would condemn you or judge you, just folks that would support you, and you create this accountability and it actually helps you to stay on track. That's how to create awareness by tracking and set intention by planning. It's day-to-day financial management. It's very powerful. The folks that I've worked with that have done this have reduced their spending dramatically and enjoyed what they spent on a lot more. Thanks very much. Please email me at grant@fullervine.com if you have questions or comments, or just to let me know you saw the video, and visit the blog Wellbeing Grant on fullervine.com. Thanks so much.